Hello learners, welcome back. In today's lesson, we are going to discuss a question on trading account. So the question reads, the information below was extracted from the books of Amina Traders on 31st December 2006. Purchases were given as 260,000, opening stock 75,000, coverage on purchases 25,000, closing stock 27,500, and goods were sold at a markup of 25%. So the examiner requires us to use the information above to prepare Amina Traders trading account. Now, move straight to the answer. And when preparing a trading account, we start by the heading, whereby we start with the name of the business is Amina Traders. Amina Traders. What are we preparing? It's a trading account. For the year ended 31st December 2006. Yes, so far so good. Then after that, we draw a capital T. Now, what are the preliminaries, or where do we start when preparing a trading account? We start with opening stock on our left hand side. Opening stock, and we are given opening stock as 75,000. Then we add purchases. And in this case, our purchases are 260,000. Our purchases are 260,000. So that we have 5, 13, and 3. 335,000. Those are goods that are available for sale. But then we have something else. There were carriage on purchases. So to find the total cost of goods available for sale, we need to add this cost there. Carriage on purchases. Which we are given as a 12,500. So if you add those two, get that, and 7 and 4 and 3, 347,500. And these are the cost of goods available for sale. Cost of goods available. This is the cost of goods available for sale. Next, we need to determine the gross profit. And before then, we need to get the cost of goods sold. How do we determine that? By subtracting the closing stock. So we subtract the closing stock. We subtract the closing stock, which we are given as 27,500. 27,500. This gives us 0, 0, 0, 2, and 3. So 320,000 is our cost of goods sold. This is the cost of goods sold. Cost of goods sold. Next, we need to determine the gross profit. But then learners, if you look at the question that we're given here, we are not given, one, the sales figure. We are not given. Yeah, so we are supposed to use this markup to be able to get the gross profit, and hence we'll be able to get the figure for the sales. Hence we'll be able to get the figure for the sales. So our markup, so we start by asking ourselves, how do we calculate markup? So markup is given by gross profit divided by, is a ratio of gross profit to cost of goods sold. Cost of goods sold. Now we have markup, we have cost of goods sold. They are given, this one is 25%. Yeah. So therefore, we can make gross profit the subject here. So gross profit now will be given by what? Multiply by cost of goods sold, multiply by cost of goods sold, meaning that gross profit in this case, we need to get our markup and multiply with the cost of goods sold. So our gross profit will be, our markup is 25%. 25% is the same as 25 over 100, that is expressed as a fraction. Multiply by our cost of goods sold, we've been able to get a 320,000, and therefore learners, we are getting our gross profit as 25 times 3,200. This gives us 80,000. Yeah, 80,000. Therefore is our gross profit. So we'll move on to the question. So gross profit is given as 80. We've calculated and we found it's 80,000. So if we add these two, cost of goods sold plus gross profit, this will give us 400,000. Why am I saying we add those two? Now, if you remember, let's move from known to unknown. How do we get margin? I know we are not given margin, but just a small recap. It's given by gross profit divided by sales. Meaning, in this case, you want to get sales. Sorry, not that one. Yeah, is given by gross profit divided by sales. Yes. And if you remember the relationship between markup and the margin, the relationship between the markup and the margin, we say also gross profit can also be given, margin can also be given by gross profit divided by cost of goods sold plus gross profit. Why am I saying this? Because cost of goods sold plus gross profit, this gives us the sales figure. Cost of goods sold plus gross profit gives us sales. And that is why we are here now. Cost of goods sold plus gross profit, this one will give us our sales figure here. 400,000. 400,000, and we are done. 400,000. So generally, that is how you're supposed to handle that question. So the examiner wanted to see whether you can be able to use markup to arrive at the gross profit, and then hence remember that cost of goods sold plus gross profit is equals to sales. That is the application that the examiner wanted you to show, that you can be able to identify that. And therefore, learners, that marks the end of our lesson today. Bye bye for now, and kindly, if you've not subscribed, please support by subscribing. Bye for now. See you in our next lesson.